Go ahead. Hi, everyone, and welcome. Sorry for the little delay in start. My name is Sarah Campbell. I'm here to just make a couple of announcements and introduce you to our presenters, and then we'll get started. Thanks again for joining us. I just want to point out that we have a Q&A section, so please feel free to submit any questions you have throughout the webinar there, and they'll either be addressed there in the chat or towards the end of the presentation. Also, please note in the Q&A that I have posted a link if you would like to sign up for our monthly email newsletter. It includes any upcoming webinars and classes, events, and of course the latest accounting news and updates. So let me go ahead and introduce our presenters today. We have Megan Brownson. Megan is a CPA and an advisory partner here at Squire. She has over a decade of experience working with the businesses across several industries, specializing in QuickBooks consulting and outsourced accounting services for manufacturing and distribution clients. With Megan, we have Ben Mejia. Ben is part of Squire's business advisory team, who has a specialty in COVID relief programs. He enjoys solving complex problems for clients and learning new skills in the process. When he's not working, Ben enjoys hiking, basketball, and spending time with his wife and 2 sons. Megan, if you would like to go ahead and take it away.
Thank you. So I just wanted to get us started here today. Before I dive in, I wanted to give you guys the open invitation to really ask whatever questions you feel like you need to ask. Sarah mentioned we have our Q&A out there for you. Ben is going to be monitoring that throughout and will respond on quick questions or publish what he can, but we also may reserve some to be asked and answered live. And so I will pause a few different times and just see what questions we have along the way so far. And then we'll really want to make sure that we're getting your questions answered as we go through this presentation. So to get us started, I guess I'll give you a little bit of context of where we're coming at with Squire here on all this COVID relief. So we have done a lot of work at Squire. We feel like it's our basically our duty to society to really understand what these opportunities are, what the rules are, how to make these calculations, from PPP to employee retention credit to all the economic stimulus programs through the SBA and through grants that are there locally for you. We've made it our mission to really know what's being asked, speak the language that of the requests that are coming in, and helping our clients understand what information to provide and what format so that they can get through all of this economic stimulus, come out on the other side on top. We hope that all of you on the call have been able to have some recovery already with COVID. Hopefully, vaccinations and other advances in technology have helped us put this at bay a little bit to help us get back to a level of normalcy. We know there's a long road ahead still for many, especially there's specific industries that still are hit hard. But we here at Squire have been making sure that we are here for you wherever you are in that phase, wherever that recovery is for you. We're wanting to be a resource for you. So please let us know if there's anything we can do to help. Today's focus is on PPP forgiveness. And the reason why we have a webinar today is because we have urgency now. For all, the last 18 months, we've been pushing PPP and getting all the money we can and knowing that there's this forgiveness timeline, but it was so far down the road, it didn't matter. So, just high level, you get your loan for PPP, you have 24 weeks to spend the money. And then from that 24-week covered period, you have 10 months to apply for forgiveness. And we are now at that point where where our clients, you guys have achieved the 10-month timeline. It's here. We've made it here to the 10-month line. And so between now and October 31st, everyone who had 2020 PPP monies needs to apply for forgiveness by the end of October. And it depends on when you got your loan of what your deadline is. So we're trying to get the word out now, make sure that you have opportunity to get that done. We'll talk through a lot of different things throughout the presentation, but that's why we're here today, is not because we're bored and just wanting to talk about PPP forgiveness because we're nerds, but because there is a deadline that you need to be aware of, and make sure that you know what your individual deadline is. So let's start talking about the different forgiveness applications. So these are the different forms that you will need to decide what you fit inside of. So Form 3508S, S for simple, is that your loan is 150 grand or less. This is essentially a form that says, you got the money, did you spend the money? Okay. And I mean, it's not quite that simple, but it is pretty close to that. And the idea is that you essentially could get automatically forgiven for that money without having to provide all the backup support. Now, you should have it behind the scenes. You should have record of your payroll costs proving that you spent the money. You should have record of all that. And your banks may even request that they have record of all that just for their own due diligence purposes. But there's not a great big analysis going on from a FTE and wage reduction standpoint. And so it is a simple form, but it is not because you're 150,000 or less, it does not mean automatic forgiveness. You still have to take action to apply for forgiveness. A lot of the clients that we've interacted with are already getting forgiveness applications submitted, and they have been. And so I honestly haven't tapped into whether those banks and lenders are nagging you all yet and telling you what your deadline is and saying, hey, your 10 months is almost up. But you still have to take this action, even if it is this simple form. I have a family member who has a loan, and we just recently were like, oh, we better take care of that. It's a less than $10,000 loan that he received, and got out there, and their technology isn't actually even working yet. They can't even accept applications for forgiveness yet. And so there is some juggling that's still happening. I've assured them that we have more time. They're going to be more on the September timeframe of when their deadline is. But hopefully these tech companies who were there for PPP loans will get their forgiveness applications up and running. So there is still some of that, roller coaster of navigation, but please be aware that you do still have to take action. Even though you're essentially getting an automatic forgiveness, you need to still apply for that automatic forgiveness. The next one is Form 3508 Easy. This one is saying, hey, my loan's over 150 grand. It could be 5 million. It doesn't matter the upper limit, but you have a simplicity aspect to it, meaning you did not ever lay people off. You didn't ever change anyone's wage rates. And so you're basically saying, yeah, we have all these costs. We didn't ever lay people off during COVID at all. And so you're able to basically say, self-attest that you do not need to do those complex calculations. However, once again, I'll say the bank, sometimes they're still requiring the backup documentation for that. And so even though the form is a simpler form to fill out, you may still need to provide the documentation to your bank to prove that you really didn't reduce your workforce or your wage rates. And certainly you need to have it individually documented there on your premise if you have not submitted to the bank. Form 3508, this is the original form. This is what everyone was originally going to have to file. And so if you don't meet either of the other two exceptions, you will use the Form 3508. You do have to show full-time equivalent analysis, and wage reduction analysis. We'll dive into those later as needed, but the Form 3508 is the original normal form. But please, if you're wanting to be wanting to look it over, make sure you're looking over a recent form, not one from 2020, because there have been changes and updates. Per round 2 information, there have been some updates to that Form 3508 that is now there. Some of the rules are now available to be retroactive to 2020 PPP forgiveness. Form 3509, I'm mentioning this because we really push this. This is called a loan necessity questionnaire. For every loan over $2 million, it was going to be required. And they have recently, in the last few weeks, said that the SBA said we will no longer require this form. And if you have it in the works, the banks can basically say, hey, just finish this out, please. We already did all the calculations, get us forgiven. Two big reasons for that. One is there's a lot of people lobbying, saying that was an invasion of privacy and against the intention of the PPP monies, and it was unconstitutional. I don't know. They had all kinds of reasons to lobby to say this form should not be asked. The other reason is, as the SBA did ask for this form, they weren't changing their mind. The forgiveness was being confirmed through, even though they're submitting this form. I'll tell you a few things they're asking in a second, but the SBA wasn't changing their mind on amount of forgiveness. Everyone was still getting full forgiveness, and so it basically was proving to be kind of a waste of everyone's time. So they were asking, like, hey, what are your revenues? Were your revenues before COVID versus during COVID? Did you make any capital expenditures that weren't for improving your business for COVID adjustments you had to make? Like putting a drive-through in on a restaurant would have been an okay expenditure, but going and building a brand new building would not have been okay expenditure. Did you make distributions to your owners that were beyond their tax needs, their tax payment needs, and things like that were being asked, and it was a good several pages of questions and lots of documentation that was requested. And so thankfully that is no longer being required of those higher loans. And by the way, anyone who would have been pulled for audit would also have had to fill out that form. We had a few of those, but now that's no longer applicable. So jumping into some of the recent, I say recent loosely, the legislation that possibly is different. When we hit forgiveness calculations really hard back in the fall and into December last year, these are just things that have been solidified that may have been items open in people's minds in the past. So one is your loan forgiveness costs are now deductible. So from the beginning, they've not from the beginning, but early on they said your loan forgiveness is not taxable. Like getting your loan forgiven is not going to be a taxable income to you, but you can't deduct your payroll costs and your insurance and benefits and things like that. And everyone's like, well, then technically it is a taxable forgiveness. And so the IRS has come and said, okay, you're right. We meant to let those be truly tax-free. So the costs are deductible as you spent them. And then the money that came in for your PPP and was forgiven is not taxable income. However, I put this note here, check your state for deductibility and for watching that change. Utah is requiring an add back to your income for those costs resulting in forgiveness. So when, let's say, you got the 2020 PPP loan, it gets forgiven in 2021. As part of your 2021 return, you're supposed to say, well, I deducted costs that I shouldn't have, so I have to add those back in to this year. So essentially it's making, Utah is creating a taxable event when you get forgiveness. The Form 3508S I mentioned is 150 grand. Originally, it was only 50. And so there, I just want to clear up any confusion there. It is now 150. So if your loan was 150 or less, you get to use that simple short form, and essentially will receive full forgiveness automatically. The EIDL grant monies, they used to be that you would get the EIDL grant. It's somewhere up to $10,000 depending on number of employees. And then you get your PPP monies. And then when you submitted your PPP forgiveness, they would say, okay, we're going to forgive you for everything except for the EIDL grant money you received. So if you received 10 grand and 150 grand of a PPP loan, you'd only get forgiven of 140. You still receive, you essentially received the 160 is what you got. And since the 10 grand is a grant, you didn't have to pay that back. So they take 10 grand out of your PPP monies to say you have to pay us that back, because we didn't intend for you to get both. They have since overturned that to say, we'll just let everyone have both, the EIDL grant money and the PPP monies. So I put this note here: if you receive forgiveness for 2020, but they did not give you your forgiveness for that grant monies, then you just contact your bank and they'll make that fix. They're probably still just trying to get through the massive lists of everything and find all the exceptions, but you do not have to repay back that 10,000 or whatever grant that you received. I had a client who received forgiveness all except for that grant, even started making payments, and they received those payments back with interest of what they had paid back that they didn't have to. So so they are making you right on that. And then I already mentioned this loan questionnaire is no longer required for the Form 3509. Okay, next I'm gonna kind of dive into some of our spending side of things. Actually, can I pause for a sec? Ben, do we have any questions we need to address with the group?
Nothing yet, Megan.
Okay, great. Awesome. So forgiveness spending. So this is where you have your covered period begins on the date that you receive the loans. So when that money landed in your bank account, that's your first day of your covered period. And it ends the earlier of 24 weeks, 168 days, or December 31st, 2020. So if you received monies in the later half of the year, you don't quite get the full 24 weeks because you're going to close out December 31st. So anyway, so that's something to note. If you were part of the early days of PPP monies, you can choose to use the 8-week period. But I put this note that banks are asking you to go the full 24 weeks so that you can basically say everything is payroll, and the bank has a lot less on their plate to review. They get to say, okay, let's make sure we understand the payroll reports. We do. Let's just do that for every pay period during the covered period. Done. We get it. Their forgiveness calculations are right, so we're moving on to the next one. And so it keeps their process very simple. But that is what we have seen some pushback from the banks to not use 8 weeks, just so that there can be a more simplified forgiveness process. So this is where I mentioned the deadlines. So the program started April 3rd of 2020. So if somebody happened to get their funding on the first day of the program, which didn't happen, the covered period is 24 weeks from that, which would be September 18th of 2020. And then 10 months later from the end of covered period is July 18th, 2021. So 2 days ago. So that's where I mentioned we have urgency right now. If you were part of the earlier group, especially if you received your monies in April, your deadline is here so soon. And your deadline is submitting forgiveness to the bank. The bank's going to take their time, the SBA is going to take their time, but you have to apply for forgiveness with your bank by your 10-month after your 24-week covered period date. So keep that in mind. And like I said, at the top, the limit is December 31st at the end of your covered period. So that puts us at October 31st for 10 months. So sometime between now and October 31st, you need to apply for forgiveness if you have not already. Okay. So some of the expenses have changed now. So historically, you could do your payroll costs, your wages and benefits. There are limitations there, but you can do wages and benefits. You have your business mortgage interest, so the interest on any mortgages, business rent and lease payments, business utility payments. Now you can also include expenses for operations such as software, payroll costs, like your payroll fees for processing, any other costs associated with tracking this information. So there may be accounting fees that you've had to pay to track all of this information and have it collected. Those are operational costs that you've needed in order to have the information and track it and maintain it, and that is allowed. Property damage. So if there's any public disturbances, you can use that property damage cost to apply for forgiveness. Essential supplies. So this kind of becomes a black hole of what you feel like is essential supplies in order to keep operating. The worker protection expenditures, those are going to be your masks, your plexiglass guards that you have up, all of the hand sanitizer in the world, all those things are going to be worker protection expenditures. Those are now allowed. And I mentioned earlier that the banks are pushing to have it be all in that very first category, those payroll costs at the top. They still want that. But you only have to have forgiveness for 60% of it has to be payroll cost related, wages and benefits. Payroll cost only has to make up 60% of your forgiveness, and the other 40% can be made up of all these other things. So I will kind of throw in a plug right now. There is what's called an employee retention credit. It is a payroll tax credit that we're helping a lot of clients through right now. And it is one that is trying to use those same wages that often were during that covered period. And you cannot double dip. You can be eligible for both PPP and employee retention credit during 2020, but you cannot double dip, which means the same wages that you submit for forgiveness, you cannot use on employee retention credit, and vice versa. The ones you're using for employee retention credit cannot be used for PPP forgiveness. And so that is bringing us some incentive for people to use those non-payroll costs, those mortgage interest, lease payments, utility, operations, property damage supplies, and protection expenditures. Those other allowed expenses are finding their way into PPP forgiveness applications because businesses are analyzing their 2020 wages in the light of both PPP and employee retention credit. So we are going to be holding employee retention credit webinars coming up here soon. And so I hope you do pay attention to those and join us for those. But if you are considering your PPP forgiveness still, I recommend you look at whether employee retention credit is applicable to you or not, so that you only submit the expenses that are needed, and you're able to use the non-payroll things to fill out the gap. Let's see. Ben, any other questions we should address as a group?
Nothing yet.
Okay. Awesome. So there are some complexities. The bottom one no longer applies, but this was definitely a complexity that was existing over time. So I wanted to make sure that I reiterate that complexity is no longer there, that low necessity questionnaire. But the FTE analysis, so this is aimed to compare apples to apples. So how many people did you have before COVID? How many people do you have during your covered period? And so it's trying to say, did we reduce our workforce or not? And if we did reduce our workforce, the money that we received for PPP was supposed to help us push it back up. That's the point of the payroll protection, was to protect our ability to pay out payroll even while we are struggling. And so that's what they're saying is say, what were you a year ago? What were you early in the year? And make sure that that FTE analysis gives us that apples to apples look. And if you did reduce your workforce and you weren't able to fully restore your staffing, then there are some safe harbors that you can use to help, and it could result in a reduction to the costs eligible for forgiveness. So the next complexity, the wage reduction analysis. So I actually didn't see this very often in my experience so far, but it does happen where you were paying somebody $15 an hour and they actually, you said, I still pay you, but I can't pay you 15, I'll pay you 12. And so they came in and said, well, it's okay if you reduce people 25%, but if it's more than that, then you should have used the PPP money to bring it back up, and we're going to penalize you for that. And so that's where they're coming from on this. Just having somebody work less hours, but they're still getting paid that 15 an hour does not trigger a wage reduction. That's part of the FTE analysis of whether they're a full-time person still or not. But the wage reduction is about that rate. Did you say that, did your salary people say, hey, I'll take a cut in pay in order to keep working, and maybe you'll make it up to me later? Things like that they're analyzing here with wage reduction. The kicker with this one is people who were paid on commission and other non-hourly, not strictly hourly, when they were paid for working hours, but then receive tips or things like that on top of it. You have to come up with what essentially their hourly rate was during January to March of 2020. And then you turn around and apply that to say, are they making the same wage by the end of my covered period? And if they are, then great. But if they aren't, especially where people haven't been able to work in as servers, and I mentioned tips that they might be getting in a restaurant. Restaurants haven't been able to open up as much, and so they may, especially during 2020, may not have received as many tips. So now their pay per hour that they worked is actually much less, and that could be something that you have to consider in your wage reduction analysis. So next, I just kind of want to, we're going to go into those complexities a little more on the deep end, but I wanted to focus on some of the accounting that you need to be aware of. So if you haven't already been doing this, hopefully your 2020 books have been closed out by now. You've probably filed your tax return. But basically for forgiveness, before your loan is forgiven, your PPP loan should be set up as a long-term liability. And your EIDL grant, that up to $10,000 you received, that goes to other income. That doesn't sit on your balance sheet. Once you receive forgiveness, you do a PPP loan as other income, and you're going to close out your loan and credit the other income. You might if you have partial loan forgiveness, you might still have to book an interest expense, and because you have a bigger amount to pay back. Because just because I haven't mentioned it yet, if you don't receive full forgiveness, your interest has been accruing. It's only a 1% rate. It's not much, but your interest has been accruing since the day you receive that money. And so if you don't get full forgiveness, then you now do have an interest expense, and you will have to pay that interest back plus additional interest along the way. So when you do as you make your payments on the remaining loan balance, if you didn't achieve full forgiveness, you would be, crediting cash that's leaving your bank account, and you have an interest expense versus a liability pay down along the way. Next, I just want to kind of show a quick example. So for full forgiveness, you had around 200 grand, you achieved full spending within the 8 weeks. So you submitted under 8 weeks. Lender came back and asked the client to submit with wages only under 24 weeks. So you did. And then forgiveness was fully achieved within 3 weeks of bank submitting to the SBA. That's an example of kind of what we saw last year. So fully, we already talked about the accounting side of it. You know, once it was forgiven, it was fully forgiven. So they just used those first 2 lines to book the loan forgiveness. But that is kind of what the timeline looked like. So what if somebody was I meant to put all but 75 grand of forgiveness achieved. So the PPP loan amount was like 235. They submitted the easy application because they were under those rules, and then partial forgiveness was achieved. So pretty quickly the bank did partial forgiveness. The lender is then will notify the client of the accrued interest and the portion of interest that was forgiven. So as I mentioned, interest has been accruing all along the way. The loan that was forgiven, you get to have that interest forgiven as well, but there is going to be remaining interest. I surmised that you would have about 44 monthly payments left to have full repayment by 5 years of their original loan date. The banks are going to be a little bit different on that, and it's going to matter where you are in the timeline to achieve forgiveness. But your repayment is 5 years. It's going to be between 2 and 5 years of when you received the money originally. So you basically have had to make no payments. But if somebody took the 24 weeks and then took all 10 months before they applied for forgiveness, they might have 44 monthly payments left. So that's just an example. And then I do want to mention this again, the deductibility. We talked about the loan forgiveness and about how Utah is not allowing it to be deductible, but other stimulus received. So the EIDL grant is not taxable for federal purposes. The other grants received, though, are. So if you receive something from the Chamber of Commerce, you do have to pick that up as taxable income, even though it's grant money from a government or from anywhere. But unless it's the PPP or EIDL grant, though, and there's one other form of stimulus that you might have received, and that was the SBA made payments in your behalf for loans, for SBA loans, that you did not have to make about 6 months worth of payments. Those payments are not taxable, so you don't have to turn around and pay tax on those. But payroll tax credits, so I mentioned that employee retention credit, those will be taxable once you receive them. Next is, what if you did get a grant and there's some accounting related to that? So the PPP loan, I mentioned you might say, hey, PPP loan I received, I decide that we fulfilled all of the PPP requirements in the year 2020. So I'm going to do my accounting as if this were a grant received in 2020, even though forgiveness was not achieved until 2021. This is an option that you can go straight to the other income account. However, if you are being audited, like if you do an audit for GAAP purposes, bank or lender or wherever a board that requires an accounting audit, there will be disclosures you make about this, and you will have to kind of show your auditors, yes, I did go through all the steps, and all I'm doing is I'm waiting on forgiveness, but I have full expectation I'm going to be forgiven. Then there are some that chose not to put the loan as a liability, and they went ahead and get it straight into other income on their financials in 2020 because they felt like it was related to 2020. So that is an alternative way of accounting for it, but just wanted to kind of throw it out there in case that helps anybody in their just deciding how to account for it. Okay. So next, I kind of wanted to dive into some of the complexities. I would say I don't want to be just talking through every one of these slides. Honestly, I feel like there's been a lot of trainings leading up to now about these complexities, but I do want to touch base on a few things and call them out on each slide, just so that you remember things that we've talked about, things that you were made aware of typically in 2020 as all the forgiveness was coming about. We did a really good job of making sure we help people understand what they're looking at. And so if you feel like you want a more in-depth review of these, I suggest you look at our website and find those previous recordings. Those are out there on our website for those PPP forgiveness recordings that we did. We did a series of them in, I want to say, September through December last year. Okay, so FTE calculation. The first thing is, this is a employee by employee analysis. And you are going in and you're saying, okay, do I want to go and say I want to take the total hours paid during the pay period, during the full covered period? So how many hours did I pay overtime? And then there's 24 weeks in my covered period. So that's an average hours paid per week. And then I divide that by 40 to get an FTE. No one can go above 1 individually, but the overall average you could use to your benefit. Or you go and say, hey, I want the average. What was my average for each week I paid, and divide that by 40 to get to FTE. Or you can say, this week my total average was, I have 45 FTEs this week, and I had 42 the next week, and I had 48 the following week. And that's number of FTEs by taking all my employees column by column for each week. And so you should get pretty similar results. But when you are looking at them, look at what the data you have available. If you just have a big export of hours, I would probably say do option 1, and then you're not doing a bunch of extra averages that you're just going to average together at the end. And then the last thing is, if somebody wasn't working for you for a period of weeks, those 0-hour weeks do have to be part of your calculation. So it's not like, well, I had this employee for 3 weeks and my average for that employee was 40 hours during those 3 weeks. You actually have to say that employee was 0 hours for the 21 weeks, and then they were full-time for the last 3 weeks. What's my overall average FTE? So you do need to make sure you're considering all the time that employees weren't there, whether they came during the covered period or they left during the covered period. So then you're going to get a final FTE by employee. You round to the nearest 10th, and then you cap everyone at 1. There is a simplified method by employee. You could, instead of having all your 0.9s and 0.7s and 1.4s, you can just say, hey, if someone worked 40 or more hours, they're 1. If they were under 40, they're a half. And this can benefit you or hurt you compared to having exact amounts. So most of the time we do both analysis and just kind of see what one offers the best return, because this is a your call kind of thing. There's not a situational where you have to do the simplified method versus the exact method. Then you do have to remove your owner employees, and those who made over 100,000 in 2019. You're gonna separate them out. They get exempted from the next calculation, the wage reduction analysis. If someone was making 150 grand and they said, hey, just pay me 100 instead, it's okay. Like that's an allowable wage reduction, even though that's more than 25%. But so they are excluded because they're already considered a high paid individual. So they're excluded from that wage reduction analysis. You're not penalized for those ones. But for those who are under 100,000 in 2019, they get reported on one table. Over 100K gets in another table. Your owners, employees are on another table. But and so you have basically you get two different FTE numbers that you add together. You take that same analysis that you did, apples to apples, and you apply that analysis. So let me move on to here, to different periods. And then you pick your best period. So the periods that you have is your covered period. There is an alternative covered period that I had a few, but very few people use, where they just align it with their weekly pay rates or pay dates instead of with their with the day that the loan showed up. But you need to show January to February of 2020. You'll want to calculate February 15th to June 30th of 19. That was the original comparative date. And then basically they've opened this up to be any 12-week period from May 1st, 2019 and on. And so anyway, so there are a lot of options there for your averages that you calculate. And then you have your covered period average, and then you have one of these periods is your best option from a comparative period. And you're looking for the one that gives you the least amount of difference. So your FTE from a year ago may have been 25, and then your FTE in January, February may have been 14, and then your FTE right now is 18. Well, you would want to use the January and February FTE to be so that you don't show a reduction from 25 to 18. You want to use the lower amount, and that's your prerogative to say, here's my comparative period, here you go. But make sure you have the support for it so that the banks can review that and buy in. Our experience is that the FTEs are asked for on these other dates as well when you're filling out applications. So when you're filling out, they say, hey, what was your FTE on the pay period? That included 12/31/19, or that included 2/15/20, or the date of your application if you're in, well, or 12/31/20. That would be the latest. They're not going to ask for any as of today in 2021, but your 12/31/20 FTE numbers. They also are going to ask for head count on some of them. Your loan application date, that was back in April, May, June, whenever you applied for your loan, and forgiveness application date, which is now. And a head count is total employees. Doesn't matter FTE. So even if you have, your boss's daughter who works, 5 hours a month, if she's an active employee, you're going to consider that a head count person. It's total employees. So that was a lot of dates, a lot of averages, a lot of numbers. Do we need to take a break at all right now, Ben, and answer any questions?
No questions.
Okay. Awesome. Just so you're aware, if you haven't paid attention to the Q&A, I do believe Ben has published a few questions out there and answered them so that for your benefit, you can see those along the way. Okay, so next is the wage and salary reduction analysis. I mentioned that this is someone for anyone who made less than or right at 100 grand during 2019. Now, if you have somebody who didn't work in 2019 or didn't work through the first quarter, so let's say they started in April or May, you don't have anything to compare to. There was no pre-COVID wage to compare to. So you do not have to worry about those guys. This is for everyone working before and during COVID. And they're in the 100 grand or less category. It is both salary and hourly employees that you have to consider. And the idea is that if you had, so there's this little trick in here that some people thought they could take advantage of. Because of this analysis that was happening, there's a safe harbor that says, if you reduced wages, but then by the end of the covered period, you proved that you got everyone back up to pre-COVID wage rates, then it's okay that throughout your covered period, you were paying people less. However, they have a little bit of, so there are some people who said, oh, well, I'll take this PPP money. I'm going to reduce everyone's wages now. It's June. I'm going to get my money. I'm going to reduce everyone's wages, and then I'll just get to spread that even further. And my money can go a lot further. At the end of the covered period, I'll just raise my rates back up and say, yep, see, we're good. I meet the safe harbor. And so there is a check figure on that. They want to make sure that you did not reduce wages after receiving PPP monies or even leading up to receiving PPP monies. So they're going to check your wages before, like leading up to receiving PPP funds, so that you didn't take advantage of a loophole. They're trying to make sure that you realize that the intent was those who had to already reduce their wages because that was the only way they could survive and keep people hired. Then they received the PPP money. The intent is they were supposed to restore those wages back up and not try to work the system. So that is a caveat, that if people felt like they could get away with it, there is a check and balance in place there. So here's what you're going to do. So this is the wage reduction. They call it a penalty. It's going to be a reduction to what you can receive forgiveness for. So there's a lot of calculations to get through whether you have a wage reduction, but essentially it's looking at what were they paid during the first quarter of 2020, what were they paid during the covered period from a rate standpoint, or a salary standpoint, and that's the analysis you do. And so here's the calculation. Someone was in Q1 was receiving an annualized salary of 75 grand. During their covered period, it was 45 grand. And so they were allowed to have a reduction of 25%. So you do a 75% calculation. So they should have paid him at least 56,250. But since they didn't, they only paid him 45. That's an 11,250 annualized amount that they didn't pay them. And so then you take that and say, oh, divide by 52 weeks because it's only 24 weeks of wages that we're talking about. So the wage reduction penalty is that 5192. And that is where you have to take all of your costs eligible for forgiveness, and you have to reduce it by the wage reduction, and basically say, well, I can't get forgiven, or sorry, I can't submit forgiveness costs for that 5192 because of this person I didn't actually pay. And so anyway, this is sometimes like the work, you have to go through all the work and say, yeah, I ended up with some wage reduction penalty. Oh, well, because a lot of the times, when you received your original PPP loan, it was for 2.5 months of payroll. But here you've had 24 weeks to spend all the money. And so you can submit a cost way beyond the loan amount. You can say, hey, my loan amount was for $1 million, but I have $3 million of costs. And so you put those $3 million in, and yes, you might have an FTE reduction on there. Yes, you might have a wage reduction on there, but those numbers are going to bring you down. But you're still going to have $2.5 million of costs, and you only needed $1 million for your PPP loan. And so while these things can come into play, they're not actually hurting everyone as scary as they look sometimes. So because they're reducing the forgivable costs, not the forgiveness amount. So if your forgivable costs are still at the end of the day higher than your loan it was originally, then your loan is what you get forgiven for, even though you had some of these penalties. I mentioned some safe harbor things for both the FTE and wage reduction. One of the biggest safe harbors is, hey, my business was still altered and not able to go back to full strength by the end of December. And so I couldn't have hired back my staff, or I couldn't have increased my wages back to normal rates. And so there are some safe harbors out there. If you do run into a situation where your FTE quotient is unfavorable, or your wage reduction is unfavorable and is going to affect your forgiveness potential, then you would want to make sure you're identifying and thoroughly documenting those safe harbors. But like I said, I don't have a million different slides here that I could have to be a super in-depth and dot every I and cross every T kind of presentation about PPP forgiveness, because I feel like we have already accomplished those in previous webinars. And so look those up if you feel like you want to dive in deeper, or ask any questions, or contact us. We'd be happy to talk through those. But basically, the end result of all of this is you submit forgiveness to the bank. They're supposed to take no longer than 2 months to get it submitted to the SBA. The SBA is supposed to take no longer than 2 months themselves to give a ruling back, which the bank is basically submitting, saying, we've already vetted all their documents. We think they're good to go. Here's the forgiveness amount that has been calculated and that we're ready to go with. And the SBA is just going to do their due diligence and say, yep, we're good. In the throng of all the PPP applications and forgiveness applications and the EIDL and all the other things that the SBA was doing, they were really slow in getting back to people. I have one client who it took them more like three months to actually hear back on forgiveness. But they were then we have others who was 2 weeks and the SBA had done it and fully forgiven. So they submitted to the bank turned around in a few days, and the SBA turned around in a few days. So within 2 weeks, they knew they were fully forgiven. And so some of that was size-based, but most of that is just related to the volume of work that the banks are handling and that the SBA is handling. And both of those, because PPP applications are totally closed for the 2021 version too, all of it's closed. So the SBA and the banks are only looking at forgiveness now. So our experience is that they're turning it around a lot faster. So anyway, that is all I had for you today. Open it up for any other questions. If there's anything that we feel like we ought to touch base on, please throw them in the Q&A. And then I'll just put our emails up there while you're asking last minute questions. So if you wanted to reach out to Ben or I, we can help with that. And I'll again put a plug in there. If you haven't considered the employee retention credit for your business, that timeline is more like there's about 18 more months left to do that, to get full opportunity there, because it's a payroll tax form that gets amended. And we are going to be doing some webinars on the employee retention credit, but we are actually still waiting on the IRS to start sending out checks for those amended returns. Once we know what that timeline looks like, we'll be pushing it a little bit more. But right now we're at 5 months and counting on some of our clients who we've submitted payroll tax amended forms for, and they sit in the IRS's mail queue and they take forever to get to them, and then they get processed. And so we we expect that money to come to our clients, but it's taking a while. And so as soon as we know what that timeline looks like, whether it's a 5.5 month or 6 month or 8 month timeline for IRS to process those refunds, then we will get back to you and get a big we'll get some employee retention credit information out there so that we can hit that hard. But I think every business should at least consider it and make sure they understand whether there's benefit there or not. So Ben, anything at all that we need to cover?
No questions for Megan, so I think we're good.
Okay. Awesome. Well, thanks everyone. Appreciate you joining us today. And we will send out these slides and end the recording later.